Good day, fellow investors. It might be surprising, but most of the emails and comments I get is always about growth stocks. So let's discuss whether growth stocks are a buy now that most of them have crashed more than 50%. This is part of my 4-video long weekend, so growth stocks, and tomorrow we'll discuss more value and where to look for value. But let's start with whether growth stocks are a buy now. The Nasdaq is officially in bear market territory and down 22% over the year, and the tech index, so high valuation names, have seen 50% decline since the start of the year, or December of 2021. So really big declines. And if we look at most of the stocks that have been so touted in 2020, and everyone was telling me when I made videos about them here, how Sven, you're stupid, this is now a new world, everything is changing, this will disrupt everything, and now you have the results. So what can I say? My wife would tell me, I told you so. Remember, a year ago, Cathy Wood was the new Buffett because the world is changing. So really good returns since then. I remember speaking about drones delivering. Berkshire will go in trouble because insurance, railroad, everything will get disrupted. So here we are. I remember also Neo made a video on it. It was around 40 or 60, I don't even remember anymore. So Beyond Meat, you might remember that video. So really bad. Very good food. This was the one that I was mostly attacked on because I was saying it's practically a scam. Oh, good. Tattooed chef. To keep things fair, I also told that Alibaba is a buy here, but of course that also crashed very badly since then. However, I also said that Alibaba can crash to 100. So it is always about understanding the risk and reward with any investment that you make, understanding the style, the potential of going down and not, and what you own despite the stock price. And the only bastion of growth stocks is still, of course, Tesla. That is the outlier that confirms the theory, so we cannot say anything about Tesla. But the key that I have always been doing in the videos is, okay, look at the price, look at what is baked into the price, and then compare that to reality. So I'll put all the links to the videos of growth stocks I made in the description below. You can see Tattooed Chef when it was at 20, this very good butchers, very good food, must go beyond sanity to buy BYND. So here we are now. Then I analyzed all the 10 growth stocks from ARK here. So what's going on? Neo owners screwed by Wall Street and the government. Palantir we discussed already. And I did this valuation in this video, so 10 best growth stocks analyzed, and you can see here that I'm always looking, okay, what's the business there and what's going on and what's baked into the price. And I said, what has to happen for, let's say, a 10% net profit margin on revenue? How much growth do we need to have? 16 times, 23 times, 38, 74 times growth there to reach something that is normal from an investing perspective, and 19 times. And of course that when such expectations are baked into the price, most of these stocks will crash. That is something that has to be expected, but most people fail to comprehend it because they simply see just the bullish thesis and forget about the bearish thesis, which is now in plain sight. And this was really a good comment that practically discusses all you need to know. And this was on Netflix, and I think streamers in general will suffer more challenging general economic outlook, market saturation, competition, will pressure margins, etc. So this is normal for all businesses. A challenging economy comes sooner or later, a market saturation comes sooner or later, competition, if you have great margins, everybody goes after you, and you constantly need to invest more to sustain market share, even in a growing market. And these are normal business things that one has to understand when it comes to investing, and also answering the question whether growth stocks are a buy now. And I call this investing Elon Musk style, just betting on this huge upside by disrupting the world. And whether it is a buy now, well, I think the first thing you have to find is businesses that actually work and that are scaling something that is working. Starbucks was profitable off the bat. From the first shop they opened, profitability was there. And then they managed to scale that. With all these businesses that are scaling unprofitably, it's much easier to grow by scaling unprofitably because you're simply offering value to the customer. If you offer me something for 50 bucks where the value is 100 bucks, of course I will go to you, but that is not sustainable for the long term for you. And when you change that, there is another competitor that does the same, which creates a very cutthroat environment for any kind of businesses. So the question is, of course, I'm investing in something that will change the world, but value investing is more about investing in some things that will never change, which give you more safety, more security, like we discussed food stocks, oil stocks, and things like that. Things that are not changing that fast. But of course, there is Elon Musk, there is Tesla, Bitcoin stocks going to the moon, and that is attractive, but you have to understand the risk and reward and the negatives that can happen. Let's go to Twitter and Elon Musk. So if we look at Twitter, revenue 5.2 billion, net income 200 million, cash flows negative, but if I look at operating net income, so the best year was 450, 300, let's say 400, 500 million. That's like, let's say 10% margin, let's say they can make 500 million. So 450 million on 44 billion that Musk is paying for. So Musk is paying 100 times operating earnings, best case scenario operating earnings. And he's doing that by taking 25 billion in a loan. If the interest rate is 2%, with treasuries at 3%, the interest rate will likely be 5 or 6%. That's 1.5 billion, which is 30% of Twitter's revenue might go for interest, which is crazy, is a crazy bet. And this might actually be the final nail in the coffin of the growth stock exuberance mania that we have been seeing up till February of last year, and it was all downhill from February, like I told you in the February 2021 video here. And many of these stocks are going to go down like this. And now Elon Musk is betting, taking on margin, doing everything an investor should not do, and risking, really pushing that risk reward to the moon. But that's Elon Musk, of course. He doesn't care if he has 100 or 50 billion, it doesn't change much. But you have to see whether you can take these risks and investing in these stocks. Tomorrow we'll discuss Berkshire's conference, and another example of that is Lemonade, that I received so many questions, especially here. It will disrupt in insurance, it will disrupt this, and yes, it did really disrupt every investor that invested there. And the problem is that there is no PE ratio, no dividend yield, so you are just investing in a bet that loses money, and that's risky. So I'll see you tomorrow with real investing, Berkshire style investing, which is what we do on this channel. So check other videos for more information and subscribe if you haven't.